In full disclosure, I launched the largest Bitcoin ETF in history and the largest Ethereum ETF in history. It just may have an impact that's 10, 20x on what Bitcoin has had.
I mean, can you put my mind at rest, please? Will the crypto treasury trend be the black swan event of this cycle?
So I think the answer is...
Joseph Shalom, co-CEO of SharpLink Gaming. Great to have you here. To start off, I'd like to ask you to do a quick elevator pitch on what exactly SharpLink Gaming is.
Sure. SharpLink Gaming is the most trusted and institutional ETH treasury company. And our goal essentially is to, on behalf of investors, raise capital, invest that capital in Ether, and ultimately stake it in a highly professional way to drive yield for investors. We do this in a way that's supportive of the Ethereum ecosystem, and we want to be the world leader and most trusted player in this space.
This sort of falls within this broader trend of crypto treasury companies popping up in the US, where it's a publicly traded company. They sort of start to stockpile a crypto asset, in this case, Ethereum. But it starts with MicroStrategy, with Bitcoin and Michael Saylor. A major difference between you guys compared to MicroStrategy here is that, like you mentioned, you can get your Ethereum to work for you by staking and other yield-bearing strategies. I spoke to a guy called the SharpLink Wow. I don't know if you're familiar with him. He's a guy who has like 3 million, I think, at one point in SharpLink. And he was telling me that the reason why he bought SharpLink was because he trusts you guys to find the best place to stake it, to custody it in the best ways, because of your relationship with Consensys and Joe Lubin, who's on your board of directors. That said, where exactly are you staking your Ethereum, and why do you think that's the best place?
Sure. Today, given that we're in some ways in the early days, most of what we're doing is native staking on a delegated basis through our marquee custodians, Anchorage and Coinbase. We also do participate in liquid staking. And I think as we start maturing and have all the risk management capabilities that anyone would expect of an institutional treasury, we will go out the risk curve, but in a smart way and a risk-adjusted way, also in a way that's supportive of the Ethereum ecosystem. I think we're at a pivotal moment in terms of opportunities to stake, and we want to do it in a way that really, really is diversified. So I think what you'll find is we're going to walk before we run, but our goal is to drive the highest yields on a risk-adjusted basis for our investors. And I think we have a differentiated team to do exactly that.
Yeah. On that, what percentage of your assets are staked, and what percentage are doing sort of other yield-bearing activities?
To date, it's nearly 100%. So we raise capital, we buy Ether, and we stake it. And our expectation is that will be the general way we handle this. The beauty of a yield-bearing asset is it derives yield when you stake it. And if you leave it sitting in cash, it does not. So our goal is to stake nearly 100%, if not 100%, and put it to work for investors.
This yield-bearing idea is sort of the core to the SharpLink Gaming sort of investing ethos here. What other yield-bearing opportunities are there for SharpLink when it comes to being a crypto treasury company?
Yeah, I think yield-bearing is one of the elements. I think the first element is just we believe really strongly that there's a long-term Ethereum opportunity. And I use the word opportunity and not trade. Trade implies it's something that's ephemeral, it's short-term, it's meant to be transactional. We believe there's a decade-long trend with tailwinds behind us of all sorts of institutional adoption through stablecoin growth, through real-world assets, and through high-quality DeFi projects. So actually, the first element of what we're trying to deliver is just capital appreciation in Ether, the token. So if you believe in this thesis, now is the time to accumulate stacks and stacks of Ether on behalf of our investors. Staking is secondary, but over time will be a really important differentiator from the Bitcoin treasuries, where those assets are great. They've delivered massive capital appreciation for investors. They're just not productive in the same way as Ethereum. So first is capital appreciation. Second is staking.
Yeah, and another way that I wanted to bring up here is your guys' relationship with Linea, which is an Ethereum layer 2 network created by Consensys that is soon to launch onto mainnet. We don't have an exact date at the time of recording. You guys are part of the Linea consortium, a group of companies that will sort of steward the launch of a large portion of its token. The sentiment online, even before that announcement, was that you guys were sort of going to bootstrap the network's launch, and Joe Lubin previously confirmed on X that you guys would somehow be helping provide liquidity over there. I sort of wondered if you had more information on exactly how that is going to work. Will you be bridging some of your assets over there, staking on there potentially?
Sure. I think at the end of the day, SharpLink has two roles to play. The first is, as you said, to be a voting member of the Linea Consortium, whose goal it is, it's actually very shocking how much of the token is going to the community versus being retained. It's like north of 80% is being used to support projects. And by that, I mean developers, builders, liquidity providers, and this is a bootstrap. And we have a really strong board who's mission aligned to make Linea a highly successful layer 2. It's the only one that's fully aligned with Ethereum mainnet from a code perspective is number one. Number two is it's actually quite interesting when you hold billions of dollars of ETH and you're looking at a portfolio of staking. And when I say a portfolio, it will be a portfolio across different sources. There is going to be an ability to deploy that through staking opportunities on Linea. And that is really, really important, not only to Consensys, but to the Linea consortium. And if there are opportunities that SharpLink can avail itself of to get better yield, higher risk-adjusted yield through the Linea network, we will do that. And that is a key part of when I say we're here to support Ethereum. We're here to support Ethereum and the L2s that derive from it. So not only allocating tokens for Linea bootstrapping, but also potential opportunities in staking and liquidity provision, given how much ETH we as a treasury want.
Yeah, how exactly are you going to play that? Because obviously we're not on mainnet with Linea yet, and you mentioned you've got multiple different places where you're staking your Ethereum. How are you guys? What are the internal conversations that you guys have when you look at a product like Linea that you mentioned it is very Ethereum aligned, and that seems like something you guys care about? What are the conversations about? Sort of, do we give them 10% of our assets that we take there and stake on chain? What are those conversations like?
I think it's too soon. I think we are at this point trying to figure out what is the optimal portfolio of staking beyond just vanilla native staking through custodians. We're also investors and staking liquidity providers to Liquid Collective, which is a liquid staking token. There are ways to drive more of the delegation to participants on the Linea network, even through native staking as well as liquid staking. I think it's early days. I'm not really comfortable sharing exactly what the plans are because we're trying to figure out the entire portfolio of staking. Remember, the number one thing an ETH treasury is supposed to do is preserve its capital. The second is to have that capital appreciate. And the third is to go along the risk spectrum and drive yield, which will be really, really important for Ethereum adoption and Ethereum liquidity.
I think an interesting element here is that Ethereum-aligned ethos that you sort of touched on earlier. But why is it important for SharpLink to be involved with companies and projects that are Ethereum-aligned, not just aligned with sort of your best interests?
Sure. I think it's both. It is both our best interest and it's a alignment. Let me explain why. I'm not sure if many of the viewers have read the Consensys report from a few months ago. It's called the Trustware Report. And one of the things that people ask is, where is the price of Ether, the token, going? And there's a very simple fundamental model that we believe in, both at Consensys and at SharpLink. And allow me to explain it in really simple terms. As you think about the valuation of Ether, there is a asset-based fundamental model that we believe in. And what do I mean by that? If you take a look at the last 5 years, And the assets that have been secured and transacted on Ethereum, and by that I mean high quality liquid assets, stablecoins dominated on Ethereum, tokenization of real world assets on Ethereum, high quality DeFi, so borrowing, lending, exchanging on Ethereum. If you look back, there's about a 2-to-1 ratio between the assets being secured on Ethereum and the value of Ether. So it's this asset-based model. As more and more assets are secured on Ethereum, the value of Ether goes up. And I can't tell you that that correlation will be linear, but I will tell you that that means, to the extent that we can drive projects, we can do staking, and we can promote Ethereum, it will drive more real world activity on Ethereum, and it'll make the price of Ether go up. And if our goal is capital appreciation of Ether, there's nothing more effective than we can do is to drive activity, real world, high quality asset activity secured on Ethereum L1 and L2s. That is actually highly correlated to what we're trying to accomplish, which is higher price of Ethereum over time. So it's both in the interest of the Ethereum network and community, but also in the interest of SharpLink as one of the largest corporate holders of Ethereum in the world.
I mean, clearly you guys are very bullish on Ethereum and the future of Ethereum. I've got to ask, what is your price prediction for Ethereum over the next 5-10 years?
I'm not one of these people who's going to put a price target out, but what I explained earlier is a fundamental model. We believe stablecoin adoption will explode. Secretary Bessent said it could be $2 to $3 trillion over the next 2.5 to 3 years. We know that tokenization of stocks and funds and bonds are really in the first inning, in early adoption. And DeFi opportunities, which are coming to institutional investors, are also on the verge of just really continuing J-curve growth. If you believe those things and that 60+% of that activity is going to happen on Ethereum, then we're really bullish, not only on the TVL, but also really bullish on the price of Ether. There are people who are predicting that by year end, it'll be north of 10K for an individual Ether token. There are others who predict over the next several years, it'll be 40,000. I'm more focused on telling the Ethereum opportunity story rather than making short-term predictions. But I think in any scenario, the price of Ether will be significantly higher, which means now is the time to accumulate and stack as much ETH as possible on behalf of investors.
I mean, over the past year, Ethereum's gone through a few interesting phases. At one point last year, it felt like it was the laughingstock of crypto. And full honesty, I think it was quite unfair, purely because its gains weren't the same as sort of Bitcoins and meme coins that were popping off last year. But recently, Ethereum has seen some gains and people have started paying attention to it again. What do you think was stunting its growth last year, and what do you think has got out of the way that is allowing it to grow now?
Sure. If it's okay, I'll go backwards before I answer the question going forwards. I joined SharpLink in July of this year, so less than a month and a half ago, after 20 amazing years at BlackRock. In the last 5 years, I was leading a team that was focused on digital asset adoption. And that work, even though people think it started in January of 2024 when BlackRock launched its IBIT Bitcoin exchange traded product, and July of 2024 when it launched the Ethereum exchange traded product, the work actually had been happening for many years. And why do I go backwards before I go forwards? Because it took explaining to institutions who had never participated at all in the crypto ecosystem, what was Bitcoin? Are we early? Are we late? Explain what you mean by a store of value. Explain why you think it has a role in a portfolio. Tell me what you mean by it's uncorrelated in the long run to equities and to bonds, and it is deflationary in nature. That took explaining, but I think it was really quickly understood by institutions that if you put 1, 2, 3% of your portfolio in Bitcoin, it was a diversifier and you had asymmetric upside. Ethereum was a little bit harder to explain. And in fact, the explanation started with Bitcoin and institutions took a few years to understand it. Ethereum is a slightly different story because yes, it's a store of value. Yes, at periods it's been deflationary, but I think the more interesting story is the decentralization of finance. So think about what I'm saying. You have to go to the largest institutions in the world who are by definition centralized and tell them that you have a thesis that a lot of this is going to happen on a neutral network like Ethereum. It's going to be trusted, it's going to be programmable, it's going to be decentralized, and those will be the rails for financial services. It's a little bit harder of an explanation, but it doesn't take convincing, it takes explanations. So I think there's two answers to your question. One is Bitcoin just had more mind share. And second is Bitcoin had earlier adoption by institutions. And I think Ethereum is having its moment for the same two reasons. One is institutions get the story now. This is almost like betting on the early days of the internet, of a technology wave that's going to be decades long that you can't really deny. You can argue about the timing. And then the second element is, I think, the combination of digital asset treasuries, the combination of the more mind share for Ethereum has a little bit like flipped the narrative. And that is why I think, it struggled for a few years because institutions who are allocating tens and tens of billions to Bitcoin got that story first. And now you see institutions believing in the Ethereum story and allocating towards these opportunities. So it's not a one-year thing, it's a multi-year conversation that's finally getting the mind share of the biggest institutions in the world.
Are you saying that Bitcoin is just maybe an easier sell, maybe not a better sell, but an easier sell because sort of it's digital gold is the phrase that normally comes along?
Exactly. It was just easier to explain and to explain its role in a portfolio. Ethereum, you're telling them a network effect growth story that is no different in some ways than Web 1 and the internet. Here, it's essentially the decentralization internet moment of both finance and other real world activity. That just took a little bit longer to explain, and the adoption will take longer. It just may have an impact that's 10, 20x on what Bitcoin has had on the financial ecosystem.
Yeah, and I can imagine for those traditional players, it's maybe a bit scary as well, the idea of Ethereum taking over. And I think in many ways, you've maybe seen that with the way that this has gone through in terms of regulation and the Genius Act, that certain things with like stablecoin issuers can't provide yield, but third parties can. It feels like sort of a way for like banks to preserve their power in that element.
Mm-hmm.
And when it comes to ETFs, Ethereum ETFs, they couldn't stake and they still can't stake, but it feels like that could be changing in the near future. That said, do you think that poses a threat to the Ethereum crypto treasury model at all? Because people are coming to you guys so they can buy Ethereum, have it staked, yield bear. Why would they come to someone like you rather than an ETF provider?
Sure. In full disclosure, I launched with my team in July of 24, the largest Bitcoin ETF in history and the largest Ethereum ETF in history. I think the biggest difference on the Ethereum front is if you think of this as a continuum, some people can buy the underlying Ether tokens, they can stake it themselves, they can self-custody. That is not easy for institutions. They're looking for a turnkey solution. The ETH ETFs were a great technology innovation. You wrapped it in a wrapper that institutions could buy. You're right, today they can't stake. And at some point, the SEC will approve that. But even when they can stake, the ETFs will likely only be able to stake maximum 50% of their funds because they need to make sure they have daily liquidity for their investors. So if they have a day of redemptions, they can't rely on waiting 2 weeks for the exit queue. What treasury companies do, including SharpLink listed as SBET, is you don't pay a management fee. You can own a public equity, which is very easy to buy for both institutions and retail, and 100% of the ETH that we accumulate in our treasury can be staked, and you can get the full yield. And you can probably start participating in slightly higher risk yield bearing opportunities to go from a 2.5%, 3%, even 4% yield profile. So I think there's some people who are going to own the ETF, but people who want full staking yield will end up buying it through a digital asset treasury like SharpLink.
What are those higher yield, higher risk yield bearing opportunities that you speak of?
I think it's as I mentioned, there's like an efficient frontier. And I know it sounds like TradFi speak, But where your entire business is buying Ether, securing it for your investors, and staking it all, you have to think of it as a portfolio. And, I would expect that the majority will be in, lower risk native staking. Some will be in liquid staking tokens, and hopefully there's more clarification from regulators as to the accounting treatment of that. And some will be in OTC or DeFi pools. But you need to be really, really careful on counterparty risk. You need to be really, really careful on credit risk. But most importantly, you need to be super careful around smart contract risk. So I think there is an element, just like when you invest your portfolio in stocks and bonds, you do a heavy due diligence to understand what you're buying. I think when you start looking into the DeFi world, you really have to do your diligence on smart contract risk, because the worst thing that could happen is you lose principal for your investors. So I think we will start conservative and then work our way across the risk spectrum with the best advice from asset managers and custodians and our experts, including expertise that lives at Consensys, which is our strategic relationship that was announced when we were formed, Joe Lubin on our board, and strategic ownership relationship across the board. So it's not an easy answer, and there's no flippant answer. You really need to think about the risks that are inherent in that extra yield you're getting.
Absolutely. And it's something that I've thought about when, I mean, I'm sure you're aware, it feels like everyone and their nan is launching a crypto treasury company at this point. And it's Bitcoin, it's Ethereum, it's Dogecoin, it's everything. And it feels a little bit scary. Like with you guys, I can understand the SharpLink Wales. He said that he trusts you guys because your relationship with Consensys and Joe Lubin on the board, and he trusts you guys. But there's other companies popping up where I don't really know who they are. They're picking really random assets. What is your thoughts on this sort of broader crypto treasury company trend?
Well, I think it's really a question of, I have two answers for you. One is we believe in this idea of co-opetition, that there can be competition, but cooperation. What do I mean by that? We believe that over the next year or so, you'll see an increasing number of Ethereum treasury companies coming out. But to be very transparent, there'll be a handful that'll be successful that will get to scale. And what do I mean by that is these are stocks that are listed on NASDAQ and New York Stock Exchange. They require a lot of daily liquidity to continue raising capital. So that's number one. So I think there'll be a consolidation of a handful of players that will gain most of the mind share and liquidity. The second answer is our purpose is to benefit investors. If you believe the thesis that there's a long-term Ethereum opportunity, this is a great way to get exposure to that. We're stacking and accumulating ETH really rapidly. But if your goal is to run a foundation and you're worried about your token price and you start a digital asset treasury really just to benefit the value of your token, and there's not a lot of liquidity, it's going to be a tough road, especially as you go down the token market cap. But clearly it's a trend. We'll see how it plays out. I think in Bitcoin, ETH, and potentially Solana, you'll see a handful of really, really scaled winners. I think the jury is out when you start getting to the smaller market cap tokens. I don't have an answer. I just think the markets will tell over a year which will be successful or which won't. I think it takes liquidity to gain liquidity. And some of the smaller tokens, if they don't have liquidity today, they don't have a big market cap, they don't have a trading volume, it's going to be very, very difficult for them to gather more assets.
A major narrative here is that the treasury trend could be the black swan event, sort of akin to FTX, that occurs this cycle. And I think the thing with crypto is that because we've had so many of these awful things happen, people are just constantly anxious about it happening. But there's quite a few theories, and some of them do make sense. Like one of them among the many is that as a company's MNAV drops below 1, MNAV being the ratio of a company's market cap to the net assets, they may be forced to sell, and there'll be pressure on them to shift their crypto that they've accumulated. And I mean, you guys have so much Ethereum that if you decided to sell it all, it would feel catastrophic. It may not actually be catastrophic for the price, but I mean, I did some math before this. You guys own 0.69% of the total supply of Ethereum at the moment, which is a crazy amount, $3.6 billion. I mean, can you put my mind at rest, please? Will
Sure.
the crypto treasury trend be the black swan event of this cycle?
So I think the answer is absolutely not, unless you mean the black swan event to drive mindshare and adoption. That hasn't happened. The reason why I say it's just not even in the same league as some of the black swan events you described is this is the most transparent approach you can have. And let me explain what I mean by that. It's in a public company. It's regulated by the SEC. It needs to follow NASDAQ rules. And in the case of SharpLink, we put a press release out every single Tuesday morning that tells you what we own, what we've raised, what is the purchase price, what is the accumulated ETH rewards that we've received from staking, so people can literally know week by week exactly what we own. And the difference is a lot of those other black swan events, there was no transparency. Here, we own an underlying asset. We own the asset. So you know that the value of the company is backed by the actually reserve assets. So that's number one. Number two is MNAV is a tricky thing. You can look at what Michael Saylor has done over a 4-year period in strategy is like the MNAV has varied between 1 over 2. Now it sits in the mid 1 range. We will raise capital when our MNAV is positive. We won't be raising capital when our MNAV is negative. And we also have an ability through a stock buyback not to sell the ETH, but to actually buy back our shares to increase the MNAV for the company. So I think we are trying to distinguish ourselves, and we hope everyone adopts the level of transparency so there are no surprises. So I think the black swan that you're describing could be this is a moment of mindshare that hasn't existed in Ethereum in years. And this is bringing that to the top of minds of institutions. And that is our goal in terms of driving differentiation, complete transparency.
Could you expand a little bit more on that? How can this be a positive black swan event, maybe a white swan?
Yeah. So I think if you take a step back, Ethereum has struggled with a narrative. It's very clear it's a superior technology. It's very clear it's a neutral, trusted platform that allows programmability. But if you don't connect that to the end user, and the end user here being both retail participants in stablecoin and DeFi, but actually think the bigger opportunity is tokenization. So if you take a step back and explain that today, most stocks, bonds, and funds trade and settle on a T+1 basis, meaning you put in a trade today, you don't get your stock or your money until the next day. And that introduces massive inefficiencies in the financial system. Somebody is taking your money for a day. Someone is holding your instrument. You have risk of your counterparty not delivering. You have financing risks overnight. You have to use collateral in many transactions. When you can explain to people that trades can settle instantly, programmatically, with trust on a neutral platform like Ethereum, there is massive amounts of risks that are taken out of the financial system. And even institutions who don't like this idea of decentralization, they may not like change in the rails. When they start realizing that they can reduce their capital requirements for trading, when they think they can reduce the risk involved in trading and transacting and moving money, I think it's going to be inevitable. And I think Ethereum, which to date has accumulated more secure transactions by 10 to 1 than the next L1, I think Ethereum will be that decentralized platform and institutions will come around. So when you say white swan event, it's about adoption by the end customer, largely new institutions who are going to take their current workflows and put it in a more decentralized, programmable, and trusted manner. And Ether, then you could argue, which is securing the network, is the highest commodity money, the highest octane money, because it's programmable and it's usable across trillions of dollars of transactions. So the white swan event is we're explaining to users what the potential is, and you're starting to see that adoption.
Interesting. Yeah. At what point Or in what scenario do you guys ever sell your Ethereum? Because I think it's an interesting thing in crypto is that we all sort of seem scared to talk about the idea of selling, despite that in many ways being the goal is to buy it low and sell it high. But what scenarios do you guys sell Ethereum?
I think we are not sellers of Ethereum. We are accumulators of Ethereum. And if you actually look back at people in both the Bitcoin and Ethereum space, the people who bought and sold and then bought and sold, almost by definition, did much, much worse than the people who bought and held. And I think that's the case in 2013, 2018, 2022. And if you believe the price of Ethereum is going to rise, you're holders. And if there are moments that you need liquidity, you can raise liquidity through debt instruments. You could do stock buybacks. So our intent is not to sell our Ethereum. It's a reserve asset, not a trading asset. And, Ryan, when we spoke in the beginning and you asked me for my elevator pitch, it was that there was a decades long Ethereum opportunity, not an Ethereum trade. So if you believe it's a trade, you should be in and out whenever it's suitable for you. If you believe it's a long-term trend, your goal is to hold and accumulate and hold and accumulate. And that is going to be the better return for investors. And almost by definition, if you look back at the history of Ethereum 10 years, you look back at the history of Bitcoin more than 15 years, the holders are the ones who've done best. And that is our intent for our investors.
So you sort of see it as like an S&P 500 trade where people just accumulate it in their sort of retirement fund or something like that over their whole entire life. And when they need it, sort of at the end of their life, or if maybe they never need it, then they take it out. Is that what you're sort of seeing Ethereum as here?
If you believe Ethereum is a future network for stablecoins, real world tokenization, DeFi, in the future AI agents, and you should take a look at the Ethereum Foundation Protocol 8004, which is focused on AI agents. I know it's a bit of a cliche. Then it's essentially a bet on the next generation of the internet. And you hold that bet because it has network effects and scale. So yes, it's being exposed to this mega trend, and that's the purpose of Ether. That's the purpose of our Ethereum Treasury company. It's not a strategy; it's a company.
I think one thing that gets ignored with this whole crypto treasury trend is that all of these companies, or at least most of them that I've seen, were companies beforehand. And you guys, SharpLink Gaming, were an online gambling marketer. I wonder how that side of the business is still going. Are you still doing online gambling marketing? How has that changed since you guys have pivoted to a crypto treasury firm?
Sure. So I joined about a month and a half ago when Consensys and others formed the initial investment. They acquired through this NASDAQ listed company that had a legacy business. That legacy business still is EBITDA positive. It's a few $1,000,000 of revenue a year, but clearly the primary strategy is to be an Ethereum operating business. And as we look forward, we're in the early days. The real question is, with our relationship with Consensys, which no other digital asset treasury has, and these are the deepest, smartest, most commercial people in the Ethereum ecosystem, are there businesses and operating businesses you can build that are Ethereum aligned, that drive potentially Ethereum denominated revenue? And then you start getting in a positive flywheel. And the beautiful thing about a public company is not only is staking rewards revenue, but operating business revenue that might be ETH denominated. And again, that could be in our future, is a righteous flywheel with respect to the ecosystem and the price of Ether, the token. And as you know, public companies typically get a multiple, a forward multiple on their revenue. And that's why it's a smarter way of getting Ethereum exposure than potentially owning it yourself or putting it in a ETF, which is a good vehicle for some, but this is, I think, a smarter vehicle for most.
Are you saying that Ethereum is going to sort of make its way into the online gambling marketing side of the company, or did I mishear you there?
No, I think as we think about the future and what future operating businesses are, they're likely to be fully Ethereum aligned in order to help promote the ecosystem, not just through staking, but through other means of institutional adoption. Ryan, to be honest, we're in the very early days of trying to figure this out. So I think it could be unrelated to marketing. It could be prediction markets through the network, but early days. I wish I had more to share, and I'll share it when I do.
I mean, how many employees are still at SharpLink from the days before the crypto pivot?
So first of all, it's an amazing team. It's a team of less than 15 people, many of whom were from the previous SharpLink NASDAQ listed company, and they're really, really important and valued employees. Don't forget, we're running a public company. You can't do that with 2 or 3 people. You have to do it the right way. So my expectation is that you can run an Ethereum Treasury strategy with very high standards and institutional grade risk management with less than 15, 20 people. And that's the beauty of the company. The operating expenses can be very flat, even as you accumulate really large amounts of Ethereum. So more than half the company is folks who worked at SharpLink, who continue to work at SharpLink, very valued employees. But we've been bringing in new employees to help do investments and staking and strategy around the Treasury.
Just to confirm, that 15 employees is now or before the pivot?
It's now. It's okay. Roughly a dozen or so employees, with more coming. I will tell you, it's a really easy story to attract the highest institutional and crypto talent. It's shocking how much interest there is to be part of a small company that can have really big ambitions. Trust me, it's a real pleasure to work for a company with less than 15 employees who are all motivated, who are all rowing in the same direction, who are all mission driven. That's actually a luxury that we all sometimes take for granted.
Yeah, and of those employees that were there before, are they now having to learn crypto stuff? Because obviously online gambling is a very different sector to the blockchain. Or are they sort of still focused on that online gambling marketing side of the company?
It's actually just a few people who are focused on that, and they're really good at what they do. The majority of the employees are focused on basic things like treasury management, accounting, financial reporting, and investments. Again, I can't emphasize enough, there may be people who are thinking of entering the DAT space and think they can do it on the back of 1 or 2 people. This takes a village. We have asset managers, we have custodians, we have really high quality accountants. We have relationships with NASDAQ. We have to be in front of the SEC. So actually the majority of the people are there to run a public company and to run a treasury strategy. You can't do it on the back of a handful of people.
What's the most exciting thing happening on that side of the fence of the company? I think it's really interesting how you're obviously this big crypto treasury firm, and you've got this online gambling stuff bubbling in the background that we don't often hear about. So what's the most exciting thing happening over there?
The most exciting thing is simply one, and that is education. And what I mean by that is, like, we're telling a long-term Ethereum opportunity story. I'm doing it in print. I'm doing it in incredible interviews like what you're running right now, Ryan. We do it in dozens of investor conversations. So there's a giant amount of education here. And I think it doesn't take convincing, it takes explaining. And by the way, this is no different from what I did at BlackRock. In the years that we were running a digital asset strategy, you needed to have hundreds of conversations with institutions, with wealth managers, with end advisors to explain the story. Like, it's not a privilege or a right for you to be successful. You have to do the work, and the work is telling the story. I also think it's quite interesting. There is a growing ecosystem in the crypto space that's been focused on anonymous retail. And I think there's a realization by many of these protocols and service providers that the real liquidity are going to come from institutions. It could be the ETFs, it could be venture funds, but more and more, the largest holders of these assets are going to be in the corporate treasury space. So there is almost a repositioning of where capital is coming from the largest holders rather than fully retail investors. And I think the protocols are really excited to gain that liquidity for staking, lending, borrowing, trading, swapping. And I think, so the long answer to your question is there's a lot of work going on. The short answer is the most exciting thing is storytelling. because you need to explain why there's a value in Ether and the Ethereum network before you can explain why someone should buy my stock. It's actually fun.
To finish off, I thought it'd be fun to ask you a few quickfire questions from Myriad Markets, which is a prediction market that is owned by the same parent company as Decrypt. First off, do you think Ethereum will hit $5,000 this year?
Yes. I just think the mind share of what Ethereum can do is flipping the conversation from Bitcoin. And I don't mean like we need to be religious, it's one or another. I actually have a belief that both belong in people's long-term investment portfolios and wallets. I just think when people learn about what can be programmed on Ethereum beyond what is programmable on the Bitcoin network, people realize that this has massive scale and network effect. And that's why I believe as mindshare increases, as people start doing more stablecoin activity, as people start tokenizing more, the demand for Ether will go up. And I think that will lead not only to short-term pricing, but I'm actually more bullish in the long run. But the answer is that's why I'm excited. The mindshare is backed by adoption.
Awesome. Venturing out of crypto slightly here, do you think Trump will visit China in person this year?
No. I think there is a view that there's a realignment of the world. You could see it through the summit in China that included both, Modi from India and Putin. And I think until the tariffs are worked out through the courts, first of all, and then through logistic systems and through realignment of where trade is happening, I think the U.S. will be focused on the U.S. And I think things will get worse in these binational relationships before they get better, because I think we're in a multi-decade reversal of the globalization trend. And I think there's a lot of pride in both the U.S. administration and certainly a lot of pride in long-term thinking in the Chinese government. So I think it'll become more distant before it gets closer again. That said, the wild card is President Trump is known for making deals. And at some point, ideology could be trumped by pragmatism. So a little bit of a hedge.
There you go.
A little bit of a hedge, yeah.
Yeah, it's a coin flip on Myriad at the moment, so it could go either way. Will Satoshi Nakamoto's wealth surpass $150 billion by the end of this month, September? Just for a little bit of context, he's currently at $122 billion. And 150 billion would put him in the top 10 wealthiest people, well, if he's still alive, in the world.
I don't know if it's a he, a she, a they, or an it, but I think in a year from now it will. I don't know what's happening this month, and I don't know what pronouns, I don't know what identifiers to use for Satoshi. So I think it will be over 150 billion at some point next year. I don't really know. I don't really think in month increments.
Yeah, I mean, this isn't a market, but I always like asking people, who do you think it is? Or do you think it's a group of people, like this mystical figure we'll never find out?
I don't know. I think we will find out. It's really interesting. I have a wild idea that at some point, 5-10 years from now, when the Bitcoin network needs to be quantum proofed, there will be some really important decisions around standards and encryption. And there'll be decisions about whether you need to hard fork the protocol, what you do with wallets that are dormant. And I have a wild theory that in 5, 10, 15 years from now, when that quantum moment comes, somebody's going to wake up and say, I don't want to be forked, or someone's going to wake up and say, fork me. That's a lot of money to leave on the table. And I think that's when we have a potential of finding out who it is. Wild theory, not based on any facts, but I just know at some point, there's going to be steps needed to secure the network. And that's going to maybe have some old OG accounts that have never been active get activated. Wild theory, Ryan.
It's wild, but I like it. Last Myriad market prediction. It's been lovely having you here. And I'll be honest, this may be outside of your normal topics. Rihanna's having a baby. Do you think it's going to be a boy or a girl?
I don't care, but I'm going to say it's going to be a human.
I think you might be right on that one.
Yeah.
Joseph, thank you so much for coming. It's been a lovely chat.
Ryan, my pleasure. This has been a super fun chat. I actually look forward to coming back in a year and looking back and seeing what we've accomplished. All these questions are going to be relevant a year from now.
Awesome. Especially the Rihanna one.
Especially Rihanna. I think I'm going to be invited for the first birthday, and I'll let you know how it goes, Ryan.
Thank you so much.